It's Jobs Friday. Polled forecasters expect an increase of 50,000 non-farm jobs in January after a decrease of 140,000, if you recall, back in December. The unemployment rate is expected to hold steady at 6.7%. Joining us now, Neela Richardson, chief economist at ADP Research Institute, and Michelle Girard, co-head of global economics at NatWest Markets. And you two do not have the same opinions about how the actual numbers measure up with consensus. I'll start with you, Neela. I think you're looking for basically what the market is expecting, and that's 100,000 jobs and the unemployment rate to stay steady. A lot of it has to do with how we're handling the pandemic.
That's right. When ADP released its numbers this Wednesday, we saw 175,000 private sector jobs. We expect with the BLS report today that those seasonality techniques and adjustments will actually boost leisure and hospitality. We know that that has been the hardest hit sector. So you might see something well above 100,000 jobs. And hopefully you'll see more folks coming into the labor market looking for more jobs. So that should keep the overall unemployment rate about the same. It might even notch up a little bit.
Michelle, I was reading and my eyes started glazing over, but we need to talk about it because you're looking for 300,000. And Leisman, if Leisman is somewhere, his ears are burning because it has to do with the seasonal adjustments being different this year because of the pandemic, Michelle?
It's what Leila said. It's not that the seasonal adjustments are different. It's that what was happening was different than what we would typically see in January. So normally you have a lot of seasonal hiring in December, and those were temporary, for the most part, workers that are then laid off in January. Obviously, in the retail sector, in the leisure and hospitality sector, with more restrictions being put on, you didn't see that typical seasonal hiring that you do around the holidays. And so there are less of those workers to actually lay off in January, and the seasonals won't be expecting that. They'll be looking for a big drop. They'll try to adjust to kind of smooth out that effect. But there won't, the end result will be that you'll end up reporting what looks to be a larger job gain in those sectors. And again, it's just a fact that the seasonal patterns this year are different. So we do have a 300,000 number boosted by that type of kind of an anomaly. And that isn't where we think the current state of the labor market probably is.
Right. You after saying all those nice things, you said that the good numbers that we got this week are all illusory, and that right.
It's interesting, though. I mean, Neil, your ADP numbers, I wouldn't have thought would have maybe such wouldn't necessarily show that same kind of anomaly. And the numbers were strong there. So we've not only seen from ADP, but the ISM numbers showed that businesses were reporting more hiring. So it is interesting that in general, labor market indicators in January have come surprised on the upside, even kind of looking through what could be some noise around some faulty seasonal adjustment.
And then, Neela, Michelle worries that they'll be, on the surface, positive enough that the motivation for stimulus could be lessened, which would be a bad long term. Is that how you view it? You think we need 1.9 trillion?
Let's be clear, we're still 10 million jobs in the hole. Right. And even at 300,000, which would be a really strong outcome this month, even at 300,000, we're talking a very long time till we fill that hole, let alone create new jobs, let alone get permanent unemployed workers into jobs. So there is still a lot of scarring in the labor market, and we don't have a good sense of how many businesses have exited who are the job creators. So a lot left to do. It's important that stimulus not just be dollars given, but dollars employed, which means creating new jobs. Remember that those hardest hit were low-income jobs. Now, do we want to bring back more low-income jobs, or do we want to create better jobs with infrastructure spending, with broadband investments? These are the things that stimulus dollars should be directed to. Let's see what they actually become, because it's not just about the top line number in any of these things. It's not just about the $1.9 trillion. It's where that money is employed, and does that money create new and better jobs?
Shepard Smith here. Thanks for watching CNBC on YouTube.